Boot up my recording before I forget. All right, so back to the normal streams. Welcome back. If you missed the market reviews we've been holding, I know it's been a while since we had a tape read, so regardless of whatever price action we got, I was gonna do the stream today. So I sent out a daily bias for what I'm looking at, and as of right now, at least it's somewhat getting violated. But I'm looking for shorts just based on the fact that we had a bunch of low resistance sell side down here. And other factors of SMT and things like that. But I'm very, very flexible today, given the fact that the weekly profile has been very difficult. Yesterday's price action took a loss. Monday took a win. Wednesday took a win. And those trades were covered on individual market reviews late at night. So I'm assuming a lot of people missed those, but we'll go back in probably tomorrow and review each of those trades that I took. So coming into today, we have a very day-to-day kind of schedule in terms of bias, meaning I don't have, preferably you have the week, the day, and the session all lining up. And that's going to give you the best sort of trade when each of these things are pointing the same way. Obviously, when they're pointing in different directions, then that's going to be somewhat harder. Well, in this case, we don't even really have a weekly profile for the past couple of weeks. The weekly profile has been pretty difficult. So you're now left with daily and session bias. And sometimes you don't even have the daily bias kind of in mind. We just have where's the session going to go. So obviously coming into the session, we've got multiple different things that I didn't cover in that bias, but I'm going to mention it here. This large expansion overnight. This technically went on Thursday in the Asian session. So as we look at midnight opening price on Friday, either way, still a large move in the pre-market. But this is obviously, like I said, this is part of Thursday. So normally when London has that large move, then you see New York consolidate. But this is still going to play into the bias regardless of that kind of time element of it. The price element of it is the fact that we have large imbalances. As we go to the 1 hour chart, large imbalance. This is a little bit more, this is in premium, obviously. So this is going to be a more likely target if we were to expand further up into this. But now that we have this mitigation block here paired with the inefficiency, that's what I was looking for. If you go over here, we had coming into 930, we had SMT between the two on both the highs and with the order blocks of PD array SMT. And you can see that YM also is not even wanting to get up into premium. So that was the kind of analysis going into the shorts. Now, sometimes when you have a bias, and this is kind of a tip for anyone who wants to flip bias, when you have a bias and you build, let's say, 7 bullet points as to why it's wrong or why it should be bearish, and then we come in and we get instantly violated like this, sometimes it's easier to flip because we've developed a very strong reasoning as to why it's bullish, and then you look at all the data of it being violated. Okay, all that stuff isn't holding, then you can look for longs. But obviously, we don't want to just flip just because we're wrong, but still analyze to make sure that price action is in fact bullish and is not entering into a consolidation profile. So based on the price action we're seeing now, what do we see? Well, we dropped into a 15-minute inefficiency with the 15-minute order block. Respect it. Candle body is obviously holding that, and then we energetically trade up above a short-term high. Now we're in premium. We also got to be careful of the fact that within this dealing range here, we're now right at 50%. So consolidation sometimes occurs down there. So I'm playing it based on what I said in the daily bias. Since we have 10 a.m. news today, which let me double check to make sure it didn't get moved around. Yeah. So 10 a.m. news today, and it's the U of M consumer sentiment and U of M inflation expectations, which is labeled high impact now. I don't know if that's the same one that was labeled orange impact that we were looking at. But that is something that I want to preferably not be in before unless it's blatantly obvious to me. I'd rather just let that news driver come in and then try and find a silver bullet trade after that I can look for that'll help me in my analysis. So using kind of the news driver as just a data point that we can expand upon and work this out. First presentation, expand upon during the silver bullet trade and just get a very easy scalp towards the direction of the one-sided delivery that's going on during the silver bullet hour. All right, so you got first presentation gap here. Also with the loss yesterday on the demo account, I'm going to drop my risk to, what was it yesterday? Because I'm already up on the week, I don't want to keep bleeding the account. This one was what? 1? Oh, I can't even see. So 3, so we'll go down to 2 today. Yeah, we've been stuck inside this consolidation range for the past couple of weeks, basically from almost mid-May. Now we're in mid-June. So about a month of this individual kind of holding pattern right below this higher time frame PD array. As we look at, obviously, this last manipulation leg, it puts us down to here, which is below the sell side liquidity pool. But my higher time frame perspective is the fact that we should go to all-time highs, all the way up here. Nice relative equal highs. This inefficiency, I don't expect this much stalling. I would have liked if we just even dropped back into an inefficiency and then started to move back up. I don't know why it's doing this very slow movement. So to me, it looks like it's building some sell side where I would be perfectly fine if some news driver in the world came out and we tanked a little bit, dropped into like a daily gap or a weekly gap and then moved back up eventually. So in terms of this consolidation, there's a bunch of sell side with no major SMT down here. So it would be at least nice if we swept that out with some move below. And then, was there Israeli missiles in Iran last night? Yeah, who knows? I'm not ending anything right now. I was looking for shorts, but the bias was obviously violated. So I'm staying flexible today. Oh, that's why the market tanked at 1800. Well, that's why we think it tanked at 1800, but yeah. I see. All right. Yeah, I would have liked if it's the excuse, exactly. Yeah, to be honest, we're entering into a weird period in the world where news is going to be... I don't even pay attention to the news nowadays, to be honest. But if you saw, like a little off topic, but if you saw in the yapping channel up there, I'll forward the link in here if you have time to watch it later. But it's a Twitter video, and it's like it's an AI video. You can't even tell until you literally like you'll notice. But we're entering into a weird period of the world where videos and pictures are not going to be trusted anymore. So it's going to be some weird stuff, man. But it's expected, I guess. It was written about 2,000 years ago. All right, so we're starting to hold some bullish PD arrays here. Obviously, the 5-minute flipped bullish in terms of this long displacement leg. Got inefficiency here being traded into with the bullish order block. I want to see how that holds and if it wants to climb and close above the Asian high here, which is marked out in blue. I'm going to remove this. My aunt sends me fake AI stuff literally every day. I know. It's going to be weird. That's why I suggest, like, realistically, it's all just fear mongering. So 90% of anything on the news is going to be useless. And the other 10%, you may say, oh, I like watching the news because I learn stuff, which is true. But if it's that important, someone else who watches the news will tell you about it. That's my perspective. So I stopped keeping track of all that stuff because there's literally nothing to me that's going to be important enough to worry about. And by the way, as we look at a week like this week, a not a figure, but a signature of consolidation on any time frame fractally. So when we're looking at 9:30, when we're looking at the new week opening gap, when we're looking at midnight opening price, all of those are fractal opens, right? 9:30, midnight open, new week opening gap. If we are hovering or touching that area multiple times, this also applies to the first presentation gap. That's evidence of consolidation going on, or you can almost look forward to the consolidation that's going to go on. So if on the new week opening gap like here, we're touching it multiple times and staying away from it, and we cannot displace away from the open, you expect consolidation. And that's true on the new week opening gap. That's true on the midnight opening price. That's also true on the 9:30. So anytime, if you need a very simple way of looking for consolidation, look at how many times, if you were to draw out all those opening prices, that were staying around and tagging, boom, 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 on a seek and destroy day or a swing to Z day. Midnight opening price is actually a very good draw on liquidity. Go back and if you look at that, you'll see that a lot of the times during these swing to Z days and the seek and destroy days, price will kind of expand away, a certain deviation away from the midnight opening price, and then come back down and drop into it, then consolidate, then leave it again, and then come back up into, like, it kind of looks like this, where we have the midnight opening price. It'll come up, leave it, and then it'll come back and hover around, then come back and leave it, almost like this. And it just stays around. And if you think about that, it makes sense, right? Because if you want the price to consolidate for the day, we're end up going to get something like this as a candle, which is just this huge doji candle that is just generating both sell side on the sell side and buy side on both ends of the consolidation range. So then when we have a large news driver, now we have both a purge and revert liquidity pool and an offset distribution liquidity pool, where we can now use this to gather liquidity on one side and then send it to another pair of liquidity over here. So I had a question yesterday about how much do I use power of three, accumulation, manipulation, distribution. It's not, I rarely use it in terms of, oh, this is power of three. I use it more as a visual representation, but I actually prefer when, instead of we accumulate, manipulate, distribute, it's a very classic profile, and you'll see it a lot of times at like 8:30 news and things like that. And even during the New York session sometimes. I prefer when there's accumulation that I'm targeting. So anytime there's a consolidation range that I can target, either as we're leaving the consolidation like this and then coming back and tagging it, or it's some sort of market maker buy model, and you have this kind of fractal original consolidation right below a higher time frame PD array. That's what I prefer in terms of a power of three. I don't like to just use the kind of standard. If you go back to a day like yesterday, you know, this sort of accumulation, manipulation, distribution, because it's not really going to affect the way I trade, nor is it going to get me into a trade. It's more of those things that you can look after the fact and be like, oh, that's what's going on, at least in my perspective and the way that I look at it. So the way that I could actually use power of three as a trading sort of mechanic to either influence the way I get into trade or influence the way I don't get into trade is by looking at that kind of consolidation. If there's consolidation or accumulation above or below the higher time frame P area that I'm trying to target, because to me that's forming the market maker sell model or buy model, and it's number one, liquidity on a lower time frame, and it's right next to that higher time frame PD array. And if you go back to any higher time frame PD array that's all being targeted, you'll see this consolidation going on right above or right below. So find any fractal market maker model, and you could look for the same exact thing where any 15-minute, 1 hour PD array that we're targeting on the day, look for a 1 minute or a 5-minute consolidation range above or below. And if you go back and study, this week's going to be kind of weird because we're consolidating, obviously. but find a week or a couple days where you have a very clean AM session move, and you'll see that anytime we're targeting a gap or targeting liquidity, and it's a good market maker model, right below that gap, say if we're bullish, there'll be a paired time frame consolidation pool right below it. So it's a 15-minute PD where you're targeting, look for 1 minute consolidation. If it's a 1 hour PD where you're looking for, look for 5-minute consolidation. It doesn't mean that if you don't have that consolidation, it's a bad target. For example, you're still looking for time-based targets on the higher time frame, but it's a added confluence that's paired in with the power of 3 and market maker models and how they form. And if you can learn that and study it, that's a very useful tool, I think, because at the end of the day, all we're trading is market maker models up and down. There's nothing you won't be trading besides a market maker model, and they have the same exact signatures every single time, which is, the 3 stages down, the 3 stages up, and that's all we'll be trading, both on the upside and the downside. So if you can learn that signature and learn as much as you can about the market maker model, those tools will always be there for every trade. And it's one of those objective truths that you can rely on to find a trade, because a lot of the price action is subjective, meaning it's up to our interpretation and you have to trust certain things on certain days and you can't use it on other days. I don't like that. I want to use things that are true every single time to frame my bias. And then that way, I can rely more heavily on those tools because on every single day, they're going to be present. And what are those market truths? If you've been on a one-on-one call with me before, I've probably mentioned this before. But number 1 is the fact that we're always going to be trading market maker models. Number 2 is going to be the fact that every single candle and range is going to be open, low, high, close, open, high, low, close. Number 3 is the fact that we're going from external range back and forth to internal range. And number 4 would be time. There's some other ones in there that you could throw in, like stages of price delivery and things like that. But these things are always going to be true. And for someone who's new, that's going to be like, yeah, of course, that's great. And sometimes it's going to go over your head because it just seems so simple that it doesn't seem like it could be important. But when you look at every single day after the fact, and any single day, even during tape reading, it all follows the same mechanic. So if you can find a bias, if you can find a trade, and they're in sound logic, meaning in an objective truth, that's always going to be true every single time, it increases the probability of me getting a good trade compared to something that's subjective, like yesterday, like when there's these, someone had a question about MES SMT versus ES SMT, those things that are going to just be there once in a while, that's more subjective, that you may not be able to see. Is that true every single day? If it's true every single day, then sure, you could start to implement it in. But these things are always going to be true. And this is what I'll frame my bias, my trades on every single time. And anytime I'm doing a market review, it's always covering each of these elements. Like, these are the major bullet points in each of my market reviews. You can go to any of them. I'll be talking about each of these, sometimes cryptically, but they'll be applied to the market on that given day. And then that way you can kind of decode what's going on. Because if you don't have any sort of thing that, you could always say, oh, this tool X is going to then this tool Y. And then it just keeps going back and back and back. And then you can never figure out what is it going back to. This is what we always go back to. So it always points back to this. It's the objective truth that we use in the market to help us decipher what's going on. If you're struggling with bias, use this. If you're struggling with trade setups, use that. So we're still hovering around this first presentation gap. I know we're within macro time here. But do not forget, we got this red folder 10 a.m. news coming in. And to me, this is, I don't want to be long going into the news because of the fact that 9:30 did not manipulate. So anytime, say we have 10 a.m. news. Exactly. We need to see manipulation, then expansion. So news profiles and volatility injections are either going to be manipulate, expand, or expand, manipulate, expand. Typically is what you see. So if I'm looking for bullish price action, it's very retail of me in my mind to see 9:30 just went up. Let me long the news. right? That doesn't make any sense in terms of what algorithmically, if it wanted to go up during this news, then 930 is probably going to drop back down, take the London low, and then trade back up. That makes more sense. Or in this case, like if 930 trades up, tags out this, and there's higher time from SMT up there. Like that. Then potentially the news driver will be dropping down. I'm not going to short it right into the news. I'd rather let the news play out. Let's see what the data is, because I could be wrong, and I don't want to be in a trade that within 2 seconds is wicked in, wicked out. I'd rather let that data point come in. I still got an hour or 30 minutes of where that target's going to go. Let me just get in a very low risk trade after that. If I got stopped out after that, so be it. But confidently and conviction wise, there's much more conviction for me to be in a trade where some sort of fluke or some sort of thing that I seemingly can't control, the amount of volatility that comes in a news driver, takes me out of the trade, because inherently that's going to make me more uncomfortable and more unsatisfied with the loss compared to if I just lost when the volatility is going down. That's perfectly fine. Would I consider 915 manipulation? I mean, not really. Yeah, to me, it doesn't look. I mean, YM is doing its own thing over here. It doesn't look like, there's any real manipulation on the sell side, nor is there any higher time frame SMT coming to 915, right? Unless I'm wrong here. No, I don't think there is. So, no, I would not look at that as manipulation, especially when you have news drivers. Like when you have a news driver and volatility injections like 9:30, 10 o'clock, those are going to be more impactful. So then we study those as manipulation. Compared to when you have like no news or something like that, then potentially 915 could be used and then 930 expands. Could a 930 be the manipulation higher for the original bearish buy? 100%. That's why I'm not trying to jump in a trade here or immediately trying to flip bias. I'm just sitting on my hands, just waiting, just seeing what's 10 a.m. is going to do. I'm still bearish for the day, to be completely honest. Like I said, if I was to be looking for longs, if you go back and read that daily bias, the most I would want to be shooting for is Asian high and new week opening gap. I mean, I guess we could go for here if the news sends us up to like right here. Say the news like pops us up and we're right here. Okay, well then potentially I could look for that. But I think look at over here, right? SMT with Asian high, digging up into premium and efficiency, and look at all of this liquidity down here. Like, no, there was not a single stop run in any of this. Every single swing low was protected. So to me, that's very evident of, okay, where they're probing all of this liquidity down here, come up, form SMT on the highs with obviously higher time frame. You can see YM is the weakest of the pair and is already dropping down. So if we can invert this first presentation gap and the news sends us lower, form an inefficiency on the news, trade back up into it, beautiful ATM model. Now, if we get a drop going into the news, like we take out this short-term swing low here with an inefficient with displacement, like if we close the next 1 or 2 candles and close all the way down here, for example, now we've got a high, low, higher high, inefficiency with displacement, market structure shift here, and then if we can retrace back up into this and the news sends slower, that'd be pretty nice. So let's let this candle print, and I'm gonna screenshot this and send into predictions chat. Two-stage SMT at local highs. Yep. I like that. So we got both the SMT at the Asian high and SMT on these short-term highs here. Coming into the macro. Getting stopped out when watching price go in your intended direction feels like punishment for being impatient. Exactly. And what did Warren Buffett say? The market is just constantly transferring wealth and money from the impatient to the patient. So I'd rather be the patient one, and if I lose after being patient, that's fine. So notice how we don't have any displacement here. That's very important. So if you're reading the 1 minute chart, it's a good indication to just keep waiting. All right. What would you do if news doesn't reach where you're predicting? I'm fine with either way. To me, if it drops down, I'm gonna be looking for shorts. If it pops up here, I probably will stay pretty hesitant unless there's a really, really good re-entry. Like I said, I don't want to really be trading into the IRLs, but there's a PM session high up here as a target if it's needed. There's liquidity on both sides. So, but I'd very much favor if the news dropped. Like I said, I don't want to be pushing today. I'm already green on the week, so it'd be very unwise of me to just force a trade just because I want to get in. So if it doesn't go down, I'll maybe look for a long on kind of the very second stage, the back end of the move. Otherwise, I'm fine with closing it out today and carrying on with building the good habits. So still no. We got a tiny one here. That's more of like a breakaway gap. Let's see if we can get it here. Obviously, there's still an inefficiency here. So just because I marked this one out doesn't mean that this isn't important. It's still very important. Obviously, given the fact that there's a 5-minute gap there. But notice how the closest order block range would be basically these highs all in here. So it's got to drop into discount and tag the bullish order block for it to even bounce if it wanted to. So watch how, if we drop this on the 5-minute or the 15-minute, we can obviously refine it down, even the 1-hour chart, 30-minute chart. Yeah, a little bit better right in here. That'd be like your bullish order block. So uno momento until the news. There's your tiny, it's a tiny gap there. It's just meh. So take a deep breath. If you're freaking out and anticipating the news, what's it going to do? It's just going to open, spike up and down, and then print in one direction. There's nothing to be worried about, nothing to be anxious about. Let it do its job. We're here to. The market has no control over us. We control ourselves. So let it do what it wants to do. It's always going to be moving up and down. It's always going to be offering opportunity. We are simply here as observers. We're all just watching a screen, watching candles, sitting in our chair. So if you're anxious, just calm yourself down. It's completely normal. Here's your news. So nice little, there's a tiny gap here on bounce. That's almost a liquidity void, but we got a little wick back up into this. Actually, on MNQ, it's a little bit better. I have the MNQ chart pulled up on another screen. It's actually completely perfect there. No VI. So filling the 2-minute gap, or was it 3-minute gap there? It's now also 10 a.m. So opening range is completed. As we standardly look for in terms of the session, open low high close, open high low close, and we know that this is timed and this is timed. So anytime we have displacement away from the opening range and kind of a continuation outside of those high and low of the opening range, it's a very easy way to get a bias sometimes. It's not going to work every day because of swing to Z profiles. That's just not going to exist. But a useful tool. So wicks do the damage, candle bodies tell the story. Where's the candle body printing for that candle, even though it was news? Right inside the first presentation fair value gap, also respecting the 3-minute inefficiency in here. So watch how this candle closes in about 1:25. There's a tiny volume imbalance I was talking about. We can take a look at all the other ones. CES is starting to move a little bit lower. We also took out the opening range low there. I want to see continuation away from it though. Which this is kind of normal. ES dropping first because of the fact that it was the weaker pair of the SMT. And then YM also I'd favor if it was, yeah, looking good. So taking out the Asian low. Be more of like this manipulation leg here. Put us down to Asian low down here. So I'm just waiting for a 1-minute sibi to form. If we can get the 1-minute sibi, trade back into it, form a SysD, I'll take that. And if it stays within the range, then so be it. I mean, just look at the 15-minute Nasdaq chart and look at the 15-minute ES chart. Like both of the the amount of liquidity we have below that, it's too much. I mean, look at the 15-minute chart on ES. I think every single swing low since midnight has been protected. Let me make sure. Yeah, besides at 9:15 when we took out one, everything from the time of 6:45 in the morning to midnight on the ES 15-minute chart, every single one of those lows has been taken out. So I know we're approaching the end of the macro time, and I don't want that either to be a psychological thing for you. Neither is it going to be for me. The problem with macro times and the problem with timing the market, obviously when you have these time ranges, is sometimes when it gets to the end of that time or when it gets even to the beginning, we seem to rush trades. We seem to say, okay, right at 9:50 now I can look for a trade. And the first thing you see, you take the trade. Or maybe at the end of the macro time or end of whatever time window you're looking for, you don't get a trade. And now it's like, oh, I was expecting to get something. Anytime, I would say 5 minutes before the macro time. And then during the macro time at around 10 o'clock, at each of those times at 9:45 and 10 o'clock, say something to yourself or reanalyze kind of your mental space to make sure that we're not anticipating any entry coming into 9:50, or really any movement or a trade coming into those time periods, because it's a very prominent psychological barrier and hurdle that sometimes time in the market brings, which is, oh, I'm approaching that time that I should be getting a trade. Let me just get in whatever I see. And it's a hot zone. It's still just, yeah, exactly. We're just conditioned from, I mean, from everything. It's just about the fact that, oh, at this time, this is supposed to happen. So we place almost too much weight on that, just like we place on anything else, any sort of PD array. We place too much weight on SMT. We place too much weight on profiling, things like that, where the time itself becomes all we're looking at. And then any sort of PD array that's somewhat in line with our bias, we get in and it's not waiting for the model. So that's why I said today, the preferred time that I'm looking for is between 10 o'clock and 11 o'clock. Preferred being emphasized. Why is it preferred? Because if there's something before, that's fine. If there's something after, I'm not going to trade it. And if there's no trade within there, I'm not forcing anything. And a lot of pre-market is managing your expectations. That's why I encourage everyone to journal or do some sort of mental checklist before you come to the charts or even while you're getting your bias. Normally when I wake up, about 10 minutes before I get to the chart, as I'm getting my water, I'll do kind of a mental checklist. Number one, am I ready to give myself money today? As Mark Douglas says, if it's not an obvious, outstanding yes, figure out why. Am I ready to manage risk today? Do I have any expectations today? Do I have any underlying wants or needs from the market? Maybe it's getting green. Maybe it's passing an eval. Maybe it's getting a payout. Any of those things. If you just do a mental checklist just to analyze, I'm not saying you gotta spend a whole lot of time, but just to run down and just be honest with yourself and kind of self-reflect. A lot of times you can spot those things and you can fix them right before you come to the market. It's times when we don't do that and we purposefully don't do that because you know there's a problem and you find it's going to create some sort of thing. It's like the market is a mirror. The market's this self-fulfilling prophecy that any sort of psychological problem that we have in the market will show up. May not be today because we get green and you don't realize it, but it's always going to show up. And it's always going to tell you your flaws. And it's a good thing because then you just look at, okay, what did I do wrong today? What flaws was it telling me I had? And you fix it. So it's a perfect environment to be in where every single mistake you can make, both technically and psychologically, will be pointed out to you and you can go in and fix it. It's one of the times that we've, number one, failed to learn, and number two, don't even want to learn or fix the things. And we're so stubborn and our ego is so high that we keep pushing that it's only until later when the brakes fall off, as ICT says, that we start to learn, okay, this isn't going to work. And we got to change something. It's forced change compared to just deliberate wanting to change. Because the pain right now, if you're feeling pain in terms of your trading career or whatever it may be, that pain you're feeling now, if you continue that process, the pain is just going to keep increasing. It's not going to be the same pain. It's going to get worse until eventually we have to just fold to it and say, okay, enough is enough. Let me just try and submit to my rules now. And then you find out that your rules are just a safety net. And if you never leave the safety net, you'll never get hurt. And it's like a beautiful thing because then you learn to trust your rules. You learn to almost fall in love with your rules where you'll never feel that pain again, ever, if you simply do the things you're supposed to be doing, don't hesitate in doing them, and constantly learn to refine and progress in trading. That's the secret, I think, is that obviously you want to get to the point where you don't care about outcomes, but the only mindset you have to have for that is if that every outcome produces the same result. What is the same result? An opportunity to learn. So whether you win, lose, don't take a trade, there's always an opportunity to learn. So it's giving you the same thing. And I don't know if you saw in the trading on chat, on the flight back, I was just playing poker on the flight. And it's a good reminder that like you're just playing the card, you're betting and you're playing whatever is given to you on your hand. Sometimes it's a bad hand, so you just fold instantly. Sometimes a good hand, so you're gonna bet. It's the same thing. And sometimes you win on it, sometimes you lose. Trading's the same way. But the only way you stay in the game long enough to obviously accumulate that wealth is by surviving. So when you have a good hand, you don't go all in. You bet a certain amount, right? Like a high end amount, maybe 10% or 50%. If it's really high, obviously in poker. And then when you're on a losing trade or you don't really know what's going on, you check or you kind of just sit out and you just see, okay, what's going on. Trading's the same way. So sometimes when you have a good hand, it's a good setup, you probably will win, right? I'm assuming that the dealer, the market, doesn't have a better hand than you. And all we're doing is we're just counting cards, we're playing the probabilities, and that's all it is. It's just it's a probability game. Let's see if we can displace through this swing low here. Kind of just stuck within this first presentation gap. The 5-minute chart also hasn't flipped bearish yet, at least from my concern. Yeah, no displacement here. So let's see if we can displace through this low. You have a high, low, higher high. You could either use that or you could use high, low, higher high. Either one of these manipulation legs would work. Right here you have minor sell side liquidity pool. Why does it minor? Because it's not time based. It's just the current kind of session range. Let me go to sell side here. Current session low. Screenshot this really quickly. There's your sibi forming. Let's see if we can get it actually. I'm not going to pre-fire it. Let's see if it prints. And like I said, if it gives me now, the retracement back into the range. I'd prefer if it comes up and tags the order block, and that'd be also within premium of this dealing range here. Then I could get in. We have to look at this. This is a little bit of a better dealing range, but I don't want it to go back into the first presentation gap. So I want this to be used as an IFEG now. Obviously, we're still trading within this gap, so there's going to be a little bit of resistance. Like I said, that we're bouncing now off of this order block here, this low, high, lower, low. Even though it's counter bias, what we're looking for, it should create at least some of a bounce back into premium. As we know, within a market maker model, every discount array that's traded into will cause a premium retracement either back to premium and off fair value, or to tag our order block with a fair value gap, and that's offering fair value. Fair value gap, either in the form of premium or discount, or in the form of an inefficiency with an order block. So basically a reference point within that fair value gap. So there's your sibi. Yeah, for the most part, this 15-minute gap has been traded through like perfectly. You can see the 1-minute chart staying within it, filling it completely, first with down, then up. So it's been pretty efficiently delivered. As we drop through this completely, then you don't expect it to be touched. Still have London low, still have the Asian low as time-based targets for today. Obviously, we're coming from an internal range. This Asian high is part of an internal range gap. So in this case, the framework for the objective market truth that we're looking for would be internal to external. So I know we're trading within this gap, but don't quickly get in. Let's see, there's some T there. Okay. So between this low and this high, that's your short-term child dealing range. It's a child because it's subsequent to this one here. That's the parent dealing range, and then obviously subsequent to this one here, a different parent dealing range. So I'd favor now if it can come up and touch this OB. Even further up into this one would be even better. LS is killing it. I don't think you should. I think it should go down there. So as we expect then this to be our time-based high of session. But don't take my word for it. I don't know. Asking me like I know. So I got two options to trade this. Obviously, number one would be trading into the inefficiency and putting a limit order on the premium, and preferably on the order block. Or what we could do is we just wait to see how far is it going to retrace. And on a lower time frame, like a 1 minute or 15-second, we look for the fractal market maker cell model to be printing. So it could be popping up again, and as soon as we have that SysD with displacement, stop limited in there, or even get on the retracement back in. So in here, we're going to be watching to see how is this SysD being treated. Does it displace and form an inefficiency through it? If it doesn't, there's a wick. Okay, so now we just want to see again. Does it want to displace and leave this gap? And the point of doing this is because if we can then analyze as, okay, we're not going to come back into this gap. Preferably, there's going to be times where it's a reclaimed gap and we come back in, and then we leave. You can't do anything really about that. And that's where kind of an entry in the gap and a stop above here would work for you. But in this kind of condition, then we can place a stop around here where the retracement is finishing. And then if we get in here, now we have a much tighter stop range compared to if we were to getting in here and our stop is all the way up here. Well, now much higher stop range, and sometimes you won't get filled if we're putting our stop on or our entry on premium or entry on the order block. Sometimes you don't get filled. So this is a kind of a more concrete way to get a tighter stop and a better entry if it lets me. So in here, we don't have, notice how it's not displacing through that SysD. It's like wicking, coming back into it. I don't like that. Don't get fooled. Flux is an insider. They try to hire me. What's that one Romeo thing? They offered me 10 million. I declined. Real. Hey, it's a good lore though. Everyone needs some lore. I don't even know what mine is. I'm just a regular guy. So none of this to me is me willing to get in on a SysD entry, nor is there any fair value gaps within here that we're tracing into. So I'm fine with leaving this one. And there should be a re-entry after that. Mine is that Flux put me on trading. Real. Bro, what is that entry? You just... Holy cow. That's a crazy entry. All right, so we still have... Hasn't taken out this low either. So this low is what started our retracement back into it. So until this low is taken out, preferably with displacement, we can use this gap over and over and over again. So we can come into it, come down, come into it, come down, come into it, come down. As soon as we take out this low, then you don't look for this gap to be traded into anymore. That is how reclaimed. Now, for the gap, gaps can be reclaimed as many times as it wants. That kind of logic that I just gave you there is more used on order blocks. What's called a reclaimed order block. So an order block can be reclaimed, basically reused as many times as it can until that swing high, swing low has been taken out. Once that's been taken out, if it even approaches the order block, it's a sign that you should maybe be getting out of the trade. Inefficiency in here. I'm watching to see. Now, if we get a SysD through here with displacement, I'm same exact idea I just gave you. Because you're on MNQ, I think. You chart on MNQ. I'm on NQ. That's why I don't like charting on MNQ. The volume is too low where there's going to be those discrepancies. I don't like that. So this is a little bit better. Now we got a VI with an inefficiency through the swing low. Not the swing low, the SysD. It's a little bit better. Contract SMT. Yeah. That I don't really think that's a thing, I'm not gonna lie. I think that's more just a discrepancy. Yeah, don't exactly. There's your displacement. I looked away for 1 second and it wants to displace. So we get an inefficiency in here. Reaches the efficiency, boom. Yelp slider. You take a trade. That is true. Atlas is the OG creator. Nah, Atlas is the OG. I'm not gonna lie. He's part of Midnight Syndicate. You remember Midnight Syndicate? The legendary group chat? Oh man, I don't think I'm gonna get an entry. I'm not muted. Am I muted? Oh man. I don't know. It says it's picking up on my screen. And my OBS is picking it up as well. I don't think I'm muted. It's not, it doesn't say I'm muted on my chart. Or on my screen, I mean. My chart. Can you hear me properly now? Hope so. Can you not hear me still? Yeah, it's here. Let me disconnect quietly. I don't know why. I don't know why it wasn't working. On my screen it was still green. Same thing with my OBS. So it just Discord just killed me, I guess. It doesn't look like I got a setup though, unfortunately. If you can just IO fed me. I just want an IO fed at this point. Oh. I'm gonna put it up in the order block and see if I can get filled out there. No, I was talking. But yeah, Alice is the OG back in Midnight Syndicate. That was a legendary group chat, man. Who is it? Me, you, Exotic. I don't know if Ruda was in there or not. I don't remember. Stop loss above the OB minus. Yeah, I like that. And take profit down at. Could either do we can do the sell side there. I'm fine with that scalp. Or even down at the London low. Is there a 1 hour PDR or a 15-minute PDR I can be looking for? Not really. I mean, we got this gap here. Yeah, same thing on the 5-1. Yeah. Is Midnight Syndicate isn't Midnight Syndicate a major influence in you learning English? If my lore is accurate. That's so funny. Teaching English through trading. Absolutely insane. Let me screenshot this really quickly. Give me 1 tick below there. Thank you. 1 tick below, please. Thank you. So I'll screenshot this. It's so funny. The power of Discord, man. Teaching English through it. Midnight Syndicate is where everyone basically learned to soup. It was an old group chat. As soon as we could take out this low, I'm trimming it to this high. Oh, let me go back to, what is this at? 21,598. One hour. 1 minute. Oops. Put this at by 8. By 3. There we go. Sorry, I was changing my gains don't stop. Bro. RuneScape in big 2025. Let me see what the 5-minute manipulation is. I can push it down to here. I think I'm fine with that. I think I'm completely fine with that sort of execution. Did we take out that low? Yeah, okay, so I'm going to trim this to not to mean threshold. So trimming my stop to mean threshold of the order block that supported me. And like I said, we took out that swing low, so just how I talked about with the reclaimed order block. But probably we don't even want to see this touched, so I actually could trim it to this high if I wanted to. That's also completely fine. And we should see this get filled out. What time is it? What time is it? What time? Time for you to get a watch. I got 3. I'm going to put them all on. Don't you just love this stuff? First day back, and it's just beautiful. Oh my gosh. Order filled. And we're about 2 minutes early, so I should have time adjusted my take profit, but who cares? Order filled. And I also, like I said, I also this is a New York Open Reversal profile. So anyone who knows the PDF and anyone who knows their profiles correctly, what is your low-hanging fruit objective on any New York Open Reversal profile? London high or London low? London. Yeah. Shout out Travis Scott, man. So I could put it down to here. I have it currently on a LEP-D, which is a PD array that I made up. It was an old video. It wasn't a lot. It was probably like a LEP-D. It's basically, it stands for a last efficient price. I don't even know how Slander knows that, but yeah, last efficient price delivery. It's basically where you have an inefficiency and there's order blocks or efficient delivery within that. Yeah, don't let ICT hear it. It's just a way of refining down a PD array, like a fair value gap. It's if you don't use it, it's really not super important. So I could push it down to here. I just want to see how order flow is printing. If it keeps holding the bearish PD arrays, then I'd be 100% fine with that. Now you have what? High, low, higher high that takes out liquidity. Last down closing candles here with an inefficiency. What is that? Do you know him? Unfortunately. What is this right here? Nice little unicorn, right? I don't know. Should I push it? Should we push it? I don't want to get greedy. Did someone say unicorn? That's a crazy total soup entry, I ain't gonna lie. Good stuff, Creed. Bro, get Aiden Ross off my screen. So on a 5-minute chart, last down closing candle here, pair with the inefficiency, and you can see on a 1-minute chart, sorry, on a 5-minute chart, it's being used as an immediate rebalance. You prefer if all the candle bodies at this point stayed within this gap. You don't want it to go to the order block. You don't want to go to this gap. This should be left open as a breakaway. I want it to stay within this inefficiency. This is a breakaway. Oh my gosh, I remember TS Goat. You were here when TS Goat was here? Wow, that's so look, it's trading into this. It's wicking. I don't care if it's closing, it's wicking past the breakaway gap. Or past the consequent encroachment of the breakaway gap. So that no longer validates that as a breakaway gap. Yeah, no, I mean, after the fact TS Goat left, I never heard anything from him. But he was something else, man. And I'm about to get stopped out on my runner here. Or maybe not. View uphold. Is that paper? Yeah, this is paper right on the screen. I got my live account on my left side. But there's a stop out. Not too bad, not too bad. I think that takes out almost majority of the losses from yesterday. I don't know. But a little scalp from today. Like I said, I didn't want to be forcing anything. I think it's a very high quality entry here, high quality exit. I'll take that all day. It's still, this is what one time, 1028. So you still expect number one, London low should go. Number two, the fact that we formed the low at the wrong time. We got a tiny 5-minute gap there, so we're trading back into it. I'm completely fine with being stopped out on the runner here. I could move it to here, like I said. I could move it to right to break even. I think trimming to there is perfectly reasonable. It's within the order block. It's also past the inefficiency here. So didn't ever use that as a unicorn setup. I think that wipes away the losses from yesterday. And by the end of June, I'll just reset this account and we'll run it up again. Yeah, reset. Yeah, so completely all the losses from yesterday wiped out in one mini trade, one scalp. But the entry there was, I kind of mentioned it, but market maker sell model they were looking for, bias was bearish coming into it. I wanted the short off of the SysD there. We never got that. I actually can refine this to the order block here. Never got that. So we're just waiting for a re-entry. And you can see how many times does it gives you an entry. It gives you one up here, gives you the soup. 1, 2, 3, 4. Probably another one in there, 5. So if you miss one, there's another one. So another bus stop coming on the way. Am I muted again? Discord is freaking out. Let me just, I'll do it again. Never mind. I'm not going to do it. Let me take this. I'll put it into the stream trades, as this is a stream trade. I didn't put the one from the execution from Wednesday or Monday in there because technically those were not more like they were not streams. The one from yesterday, I was kind of putting my bias out and things like that, so I'll count that as a stream trade. But if you missed those, if you want to go back and look at them briefly, Thursday's trade was that short I got stopped out on. Wednesday's trade was a nice long back up into premium and getting pretty close to the high of the day, or high of the session, I mean. And then Monday's trade was another long going up into the high of the day up here. So I'll cover this kind of trade here. So I do think it's going to go down and take out the London low, or preferably leave form a low post 1030. But we got a dealing range there with the bearish order block, and I marked out this one because this case this would be more of the mitigation block, but in this case we actually did run up to the bearish order block here on 15-second chart. Come in, tags that, boom, and then the stop goes above the order block, as that should be holding price, and then taking one off on the sell side there. The standard deviation of -2, -2.5 adjusted, and getting stopped out in profit on the last trade. And that'll wrap it up for the week for me. Hopefully it made sense. Hopefully you learned something. Hopefully you didn't copy trade me, but instead you learned something from it. Yeah, I think overall not a bad day. I'm glad with I stuck bias. I was very patient. Like I said, we're looking for a silver bullet trade. We're looking for post news. We got exactly what I at least I got exactly what I was looking for. Let the news play out. Find the silver bullet, easy scalp. I call that in the beginning of the stream. And that's textbook what you need on a 10 a.m. news day. Came in, got what we needed, leaving. Doesn't matter if it won. The like Justin Werland said, the money is fairy dust. We come in today, we build good habits. What's the good habit? I was patient. I didn't trade 9:30. I didn't flip bias immediately at 9:30 just because it started going up. I waited for the 10 a.m. news. I was patient. I got in my setup there. I did not FOMO in as soon as it started dropping down. I didn't get the SysD entry. Got the entry there, put the stop loss at the reasonable spot, took profit, and then trim my stop to break even. That's what I do every single time. So I'm just reinforcing that habit after the day is finished, after we wrap up the stream. I'm going to go and journal, go write down what I did good, what I did bad. How can I improve? I think I could have gotten a little bit of a better entry there, even looked at. Yeah, I think that's pretty much it. There's no real sibi within the macro time here, so I don't want to be shorting it going to the news. I don't think there's a lot of times on the winning days there's going to be less to improve on, but obviously the bias of 9:30 going back up, I could have potentially looked for that and then look for a Vantix model somewhere up there, because we probably had multiple Vantix models going on today. And we're back into premium of the range. So that's exactly what we're taking it off there. And taking that break even. And we're coming back up to the... No, this is not a Vantix entry. This is just a regular order block inefficiency. Kind of like just a regular, I don't know. Yeah, this is a standard entry. This is not Vantix. Vantix was up here. Yeah, it's a PDF model we covered. For the guys in the PDF group, I think I'll put the second video out tomorrow or on Sunday. I got 3 calls today, and then I am trying to edit the IRL video from the trip sometime tomorrow. So I don't know when that PDF, the second part of it, is going to come out. I got to just catch up on a bunch of work, obviously, from the vacation. So when all that's finished, then we'll kind of get into the fun stuff of the extra, of course. So first day back, with kind of just scalping it, getting back into the flow of things. I finally got a big monitor, not trading off of my laptop. That's nice. Obviously, if you have any questions, let me know. I still got about 25 or so, 25 DMs. So I'll catch up on all of those. If I don't get to you today, I apologize. I'll try and get to you tomorrow. But I appreciate you guys sticking around. Hopefully it was insightful today. Obviously, do the things that are necessary to succeed. And next week, I think, what news do we have next week? We got Monday. Okay. Tuesday. Oh, let's go. Tuesday, 8:30. Wednesday, 8:30. Thursday's a bank holiday. What's going on Thursday, June 19th? June 19th. Oh, it's Juneteenth. Okay. So Tuesday, Wednesday is going to be. On a Wednesday, we've got Fed funds. All right. So it's going to be a little bit funky next week, but we'll have to see. Monday actually might be decent. We'll have to. It's the day before 8:30. I don't know. Anyways, we'll just take it day by day. If hopefully we get some good weekly profiles coming into next week. If not, no big deal, and we'll be done by that. All right. So, like I said before, do the things that are necessary to succeed. I'll catch you guys hopefully next week on Monday. If not, we will be having it on Saturday, a backtesting stream. All right. So good luck, good trading, and I'll talk to you guys soon. Peace.